Welcome to a Carbonfuture webinar. I'm Leila Toplic, and I'm your host for today's webinar. And in today's webinar, we'll be discussing some of the key trends that are shaping the carbon removal market in 2025 and beyond. We'll be talking about supply, we'll talk about demand, policy, and more. Next slide. So to unpack this, we've gathered some of the leading voices in carbon removal. We have Nikki Batchelor, who is the Executive Director of X-Prize Carbon Removal, and X-Prize Carbon Removal is focused on driving innovation in CDR and building the market. Robert Hoagland, co-founder of CDR.FYI, that's been tracking purchases, deliveries, and verification of CDR, a fantastic resource for all of us in the sector. He's also the head of CDR and climate strategy at Milky Wire. Naseem Poor is the lead for carbon removals and market innovation at the World Economic Forum, and is working with the WEF's First Movers Coalition. That is a global coalition of over 100 companies that are leveraging their purchasing power to decarbonize the world's heavy emitting sector. And Eve Tame, Managing Director at Climate Principles. She's one of the leading policy experts and specializing specifically in regulatory frameworks that are shaping CDR markets. Welcome, Nikki, Robert, Naseem, and Eve. Next slide. So here's what we're going to cover in the next hour. We'll talk about some of the key insights from 2024 and expectations for this year and next year. We'll dive deeper into specifically supply side trends and pathways to scaling. We'll talk about demand trends and corporate purchasing behavior. We'll also talk about how Article 6 and regulatory changes might be impacting the scaling of CDR. Now, for the first few minutes, I've asked each speaker to kick things off with about 3 to 4 minute perspective, and then we'll spend most of the time today in the Q&A with all of you. Just to note, we received over 700 registrations for the webinar, clearly a hot topic, and many of you took the time to submit questions. So for the Q&A, I'll be pulling from both pre-submitted questions and the live questions, and do use the QA box to submit your questions. So next slide. Robert, let's start with you. If you can tell us, how did the CDR market do in 2024, and what is the signal for 2025? Over to you.
All right, thank you so much for the invite. Very brief, 3 minutes. We track all the orders of durable carbon removal purchases and deliveries at CDR FYI. And we can see it's a market that continues to grow. In the bottom right here, you can see all the orders in 2024, and it's 8 million, 73% growth from the year before, although not as explosive growth as between 22 and 23. And it's quite dominated by a few buyers, especially Microsoft, but 80% of the volume comes from either Microsoft, Google, or the other frontier buyers. So it is a small group of companies that is engaging. In Q3, we were a bit worried because it looked like the unique number of buyers were stalling, but thankfully people were saving their purchases for the last quarter. And so we saw a full year still increase in both total amount of buyer, but slightly over 200, but also an increase in the unique purchasers. But still, even the ones that purchase small volumes are quite few companies. So it's something that needs to grow a lot. And we see how the number of suppliers with a registered sale is also continuing to tick up. So it's not just the sort of usual crowd that gets sales. It is also the new entrants that have managed to start pre-selling their credits. And also deliveries is growing, but of course at a much smaller volume than the total sales. But that is something to be expected when you're building a completely new market. So moving on to the next slide. Even though the market is growing, we have about 500 suppliers in the CDR.FYI database. And it's only about 36% of them that have a registered sale. So the number of suppliers is really big, and it's going to be difficult for everyone to get those sales and start growing. And we also did a pricing survey earlier this year with Opus, where we saw there was a gap between what purchasers were expecting to pay and what suppliers needed for break-even price. So we do think that there may be more price competition for CDR credits, where these kind of more immature early stage companies may have harder to compete when it comes into this second wave of buyers that may not be as, let's say, altruistic or forward-looking, and there may be more competition on price, even though the sector is not fully ready for it. So we've been kind of recommending to make sure to extend runway, bring down costs of your credits, but also operational costs. And looking forward, what really could 10x demand or more is if we get these clear expectations on companies that you have to start buying carbon removal today. You don't have a credible pathway to net zero if you don't have emission reductions on the way. And in the same way, your pathway is not credible if you're not starting to scale up CDR, because no one else than companies and countries needing to meet net zero targets are going to be customers. So everyone needs to get involved. And SBTi, but also ISO's net zero standards, SBTi updating their current one and ISO publishing a new one, we're expected to come out this year, will be really important in this and setting those expectations for companies setting interim CDR targets. And at Milky Way, we today published a white paper on CDR target setting. So going through all the hows and whys and buts for setting both long-term and interim CDR targets. All right, I think that was 3 minutes, almost 4 minutes, so I have to stop. Thank you.
Great, thanks so much, Robert. And just a note here, Robert is participating from Thailand, and it's like 11 o'clock at night for him. So thanks for, and we'll come back to some of the topics that you mentioned, including SBTi, and want to just touch on the supply side. As you mentioned, extend the runway, reduce costs, stay focused on execution. But let's dive deeper into specifically supply side trends with Nikki. Nikki, so yesterday you also launched another report, and that's the 2024 Circular Carbon Report. And this report, you're not only analyzing annual fundraising data, but you've also assessed the sector's progress over the last decade and identified some of the key lessons to bring forward. Can you share some of these highlights with us?
Yeah, thanks, Leila. Thanks for having us today. So, just to dive in here, we at XPRIZE have been working in the carbon management space for a decade now. So this report is a bit of a retrospective on all of that work leading up to now. We started, kind of before the carbon removal boom. So we were looking at utilization projects and traditional CCUS projects as well, and the early days. So that's kind of half of our database was really looking at conversion and market infrastructure development projects. And we've added all of the carbon removal data since we launched that prize in 2021. And so now the Circular Carbon Network is kind of a comprehensive database. We have several indexes in there where we track the number of companies in the space. Over 1,000 are listed, and we've been looking at the different trends across their fundraising, not their deliveries so much. So it's very complementary to what Robert's been talking about with all of the buyer activity. We haven't been focusing on that as much. It's been more on the supply side and the investor side. So next slide, please. I'll give you a few of the highlights here. When we looked at the kind of the growth of the sector, we wanted to see if there were any lessons to learn over the recent decades of how the space came together. So there's a really detailed timeline of all of the big milestones that have led us up to this point. I'm not going to focus on that now, but just a quick call out that that's in the report. But if we head to the next slide, I can show you some of the cumulative data that we've been tracking in this space. We're over 27 billion now raised in this circular carbon market. And in 2024, that amount was 6.6 billion. So we are definitely seeing there is still investment going into the space. And I want to break down a little bit in more detail what it looks like and the trends that we can take from that. If we go to the next slide, you can see just in comparison to the broader climate tech space, it's interesting to see, we had this steep decline from 2022 to 23. And the numbers for circular carbon are in purple at the bottom there. You're seeing, you know, the trend fluctuate a little bit, but we're at the same for 2024 that we were as 2022, 6.6 billion. So we're seeing steady movement still in this space, despite, you know, the declines in the overall climate tech sector. So that is something positive, that this space is still occupying a significant portion and growing, you know, over time of the broader capital going into this space. If we go to the next slide, you can also compare that against the company formation growth. So at XPRIZE, we work with a bunch of suppliers, teams we call them, who compete in our prizes. But in the broader sense, we've been tracking other companies coming into the space over time. And you'll see the purple is the all companies versus the new companies coming in. So it's definitely declining in terms of new company formation. So that's a key thing to keep in mind, as the competition for the earlier stage capital is maybe getting less significant as it's declining. So companies are starting to mature in this space, which you would expect from the boom that happened in 2020 and 2021. We're seeing those companies move along the capital stack. If we go into the next slide, you can see the number of deals here represented in each bar year over year. So we definitely have fewer deals in total in 2024, but the cumulative amount is higher than it was last year. So that's a consolidation towards these later stage deals. If we go to the next slide, you can see that in a little bit more granularity, the comparison of the early stage capital that we grouped together, pre-seed, seed, Series A, compared to the Series B plus growth capital, that we're starting to see these larger deal sizes moving along. And then if we go into the next slide here, you can see the breakdown for carbon removal specifically by subsector. In 2024, we saw an increase in both the air category, so the direct air capture companies, and the rocks companies, so all of the enhanced rock weathering folks, mineralization companies. So we are seeing some increases there over the last year, maybe different in the land and ocean space, but you can dive into all of this in more detail. I just wanted to give you a flavor of the kind of data that's in the report. If we go to the next slide, just a quick, you know, few takeaways for suppliers. You know, investment is still flowing into the space, especially in these larger rounds. So don't lose confidence that there is no money available, but it is getting competitive, especially at those higher deal sizes. And so investors are really looking for scalable solutions right now that are demonstrating traction and show real execution. So the removals happening, the sales are happening, you have proof points already in order to get to those next stages. The standards are high. For earlier stage companies, I mentioned this, but, you know, there's less competition from new entrants, but having, you know, clear differentiation is important, because there's so many companies in this space now. You need to come out clear and strong with how your unique advantage is going to be, you know, worth scaling. And so something, you know, some things to keep in mind as you're working on your pitches, but we'll talk more about some of the trends in a few minutes, but I'll stop there now with my slides. Thanks, Leila.
Great. Thanks so much, Nikki. Thanks for sharing some of the insights from this hot off the press report, and also really focusing on some of the practical actions that the suppliers who are listening to this conversation can take today. Let's talk about demand. So Nasim, what demand-related trends are you seeing across the WEF FMC coalition of 100 plus companies? Are there any notable shifts in corporate commitments or purchasing behavior that you can share with us?
Thanks, Leila. Hello, everyone. It's a pleasure to be here, and greetings from Geneva. Well, let me take one step back. Well, this year has kicked off with some unsettling signals, as many corporates and even some governments are stepping back from sustainability commitments. At the start of this year, while listening to leaders from public, private, and civil society at Davos, there was a shared concern that climate action could take a wrong turn. And we've all seen the headlines and even noticed some quieter shifts. But trust me, I don't want to downplay the real progress we've collectively made in advancing bold climate action, especially scaling up durable CDR. On the contrary, I want to highlight the importance of optimism, real action-oriented optimism that focuses on leadership and sustainable solutions that goes beyond just the short-term ebbs and flows. And speaking of bold leadership, I'm excited to share that this was the very agenda behind the launching of First Mover Coalition at COP26 in Glasgow, as we call it FMC, is one of the flagship initiatives of the World Economic Forum, and it's all about mobilizing industry leaders to take impactful, bold action. The idea is basically to leverage the collective purchasing power of private sector to create demand for technologies that are essentially for getting us to net zero, especially for the hard to abate sector, which are responsible for around 25% of global GHG emission. And to date, we have over 100 members of the FMC who have committed actually to more than 16 billion in investment in innovative climate technologies, goods and services, including SAF, green aluminum, etc. Plus, we have close relationship with governments. We have 13 government members that collectively present 15% of global GDP. So as you can see, alongside the 7 emitting sector at the bottom, the CDS sector was created to help these hard to abate industries meet their net zero goal. And in the next slide, please, we can see how companies could join the FMC CDR sector. So to become a member, companies commit to purchasing at least 50,000 tons of durable CDR by 2030. Currently, we have 11 members, which may seem like a small number, but collectively, they actually make 80% of all CDR purchases to date. And our goal is, of course, to continue expanding membership. Additionally, we work with partners who help us actually help the members meet their commitment by sharing knowledge and identifying opportunities for collective action to grow CDR market. One of our key partners is, of course, Carbonfuture, who plays a great role in offering insight and supporting knowledge exchange such as this webinar. So in addition, we are well aware of the progress that is needed on the supply side. So we've created a supplier hub, allowing credible suppliers of durable CDR to showcase their offerings. And basically is to make the members aware of CDR suppliers that meet FMC criteria. So for the suppliers on the call, feel free to reach out if you want to learn more about how to join the hub. And also buyers, if you want to commit, please contact me. In the next one, I will jump into the insights because, well, essentially FMC is a coalition of buyers, and working closely with members has given us some insight about the trends that we are observing in the ecosystem. The first is hard to abate sectors. So while historically the tech sector has been at the forefront of CDR purchase, Microsoft, Google, just the two make for around 70% of CDR contracts so far, but we're seeing that hard to abate sector are such as, just for those that you're not aware with the term, like aviation, shipping, cement, steel, those that, the technology to decarbonize are not available or at high cost. So these sectors are beginning to turn into CDR solution because they realize that relying only on direct emission reduction won't get them to net zero in short mid-term. So they need CDR, and honestly, the volume that is required to get them to CDR is most likely to be that factor that will move the needle in growth of CDR market going forward. Examples are shipping companies like MOL, who's actually a member of the FMC, but others like in aviation giants like Boeing, Airbus, British Airways, etc. So that is the number one. Then we see some sort of policy influence and regional shift. We see that in Europe, well, EU-wide, we have this EU Green Deal that could potentially drive many companies to incorporate CDR. Then European Commission has been developing CRCF methodology. Countries like, Switzerland, Denmark, UK are a bit more advanced. Others are catching up. But then when it comes to integration of CDR credits into the emission trading system, both EU and UK are exploring it seriously. So that's on Europe. That's been historically, one of the first movers in terms of policy making. North America, while it's still unclear how the US government will continue its effort, but the momentum was built by DOE by introducing a tax credit for CO2 use in the storage, CDR Leadership Acts of 2024, and the Regional Hub program that has supported a lot of, especially DAC projects. And then, while it's been most of focus in EU and North America, but then Asia is catching up. FMC has had its first in-country workshop on CDR last year, and we see more and more appetite for countries in the region, especially Japan, on embracing CDR into its emission trading system. China is a bit behind; they're still developing their policy making, but then the sort of relaunch of their national VCM last year could potentially stimulate demand for CDR. I think I'm already way above my time limit, but bear with me. The other one is long-term corporate purchase. So while there are few buyers that have gone for long-term 10 years plus agreement, examples are Microsoft with Climeworks and Stockholm Exergy. It's good to see that has been sort of the pattern for other CDR projects, including biochar and Hasrock weathering, because as you know, these longer term projects are essential for getting a lot of projects off the ground. Increased demand from financial sector, which are increasingly becoming key players in CDR markets. By number, actually, the financial institutions and insurance companies represent the largest group of individual buyers. I think there are about 50 firms. So Robert, maybe you could confirm or not. But, Swiss Re, JP Morgan, Morgan Stanley, others collectively purchasing around 500,000 tons of CDR. And it's important because they're not only the buyers, but, they are the enablers for CDR's ecosystem. So their active involvement in this ecosystem could basically support more innovative financing mechanism coming from them. And then standard and verification, the lack of mature MOV has been always one of the roadblockers for CDR development. And now we see more and more standard bodies coming and setting standards or methodologies. It's good to see that there will be more harmonization across these. That makes it easier for corporates to navigate. Sometimes it could be really confusing or even contradictory, looking at these different standards. And so these emerging trends are needed to evolve into strategic long-term shifts, so they don't stay as trends. Basically to shape the growth to the gigaton scale of CDR that is required. So we need real change. Sorry, I'm just trying to. So we really need change, but not that needs to accelerate to get us to a scale. So now here is the maybe transition to what Eva is going to present, and is Article 6 is one of those that could basically catalyze this shift. Thank you.
Yeah, fantastic. Thank you so much, Nassim. It's so helpful to see some of these trends, and we'll actually revisit some of these in the Q&A, as a number of questions that actually came in that were pre-submitted are touching on some of these topics. So you highlighted policy and regulation as one of the key drivers of demand, and as you said, perfect segue to Eve, who will talk us through Article 6. So Eve, can you tell us how Article 6 is shaping the international carbon market, and what does it actually mean for durable carbon removal?
Thank you, Leila. Happy to elaborate on this, and I promise not to take too much time. So Article 6 is obviously the article in the Paris Agreement that contains provisions to use carbon markets to increase countries' climate ambition. And I'm just making that statement in the very beginning because it's not only about helping countries to meet their targets, but it's really about increasing the ambition further by using these market mechanisms. And what we have is Article 6.2, where we have a counting mechanism that is also basically used for bilateral trading between governments. And this is where most of the action is happening these days. You'll probably see a link soon shared from AITA's website that tracks exactly which countries are buying, which countries are selling. And this has been operational now for a couple of years. And then we have a 6.4 or Paris Agreement crediting mechanism, where we had a big breakthrough at COP29 last year, where we had two standards approved or taken note of formally. And now this mechanism, a centralized mechanism, is also basically operational. And here we will be also seeing more action over the coming months. Actually, both have relevance for private sector and sellers and buyers. Obviously, the Paris Agreement crediting mechanism more clearly, but also the bilateral deals between governments. It really depends how governments decide to implement this in their own country and how they allow the private sector to be engaged. So there are different ways how this can happen. Different countries have taken different approaches. I mean, so far, most of the trading and the deals have happened under 6.2, and there most of the interest has actually come from seller countries. So there are much more sellers than buyers. We haven't seen yet durable carbon removal projects feature under Article 6. We've had forestry projects feature. But basically, how we should look at the current situation is that we are laying the groundwork for that to be possible going forward. So under 6.2, we are seeing standardization because it's really fragmented market today. We need to standardize a bit to make more sense of it. We're obviously seeing expansion, and we're seeing further price discovery. Let's see whether what Robert shared earlier also feeds into that. And then under Paris Agreement crediting mechanism, of course, we are still building the infrastructure. Now there's the interim registry, and we'll see the first credits issued. And these are, of course, going to be from clean development mechanism projects. So we're not yet talking about durable carbon removal projects under this mechanism, but it is bound to happen eventually. We just need methodologies to be developed and submitted for approval. So it's really time to educate governments on what CDR methods are feasible on their territories and why they should support novel CDR projects under Article 6. Countries will have a very different why they would choose to do that. And yeah, it's time to engage and make it possible.
Fantastic. Thank you so much, Eve. This gives us a great foundation for understanding how policy is shaping carbon markets, and we'll certainly come back to that. Now, I want to open it up for Q&A. So all four of you have set the scene for what's happening in terms of demand, supply, and policy. And we'll dive deeper into some of these topics. And as mentioned, I'll be asking a mix of questions that were pre-submitted, just to be respectful to those of you who took the time to share the questions during the registration, and also live questions. So Robert, I want to come back to one of the points that you mentioned in your opening remarks, the importance of SBTI's guidance on scaling demand. You are a member of the technical advisory group at SBTI. How do you see SBTI's guidance on carbon removal evolving this year? What developments would you like to see to ensure CDR is effectively integrated into corporate climate strategies?
Yeah, so what's coming up is Net Zero Standard 2.0, and the first one being published in 2021, that said clearly that permanent carbon removal is needed to neutralize the remaining emissions, but also capped it at 10% and didn't have much guidance on how much, exactly what and when and so on. So what I and many others are hoping to see is clear guidelines on like mandatory scale up of CDR, that credible pathways to your net zero target also involves setting these kind of interim targets and having, you know, clear mandatory guidelines on that. I think that would be really impactful. And that goes for the ISO net zero standard that also will come out soon. So having those kind of signals will be really important. And the SBTI did mention interim targets in their call for new expert groups. So we think that something is going to come up. I can't say anything about the internal discussions that's in this external advisory group that they had up until now. But yeah, it is going to be quite important and could make a huge difference for demand, for sure.
Great, thanks for that. So interim targets are needed to get businesses to scale removals alongside deep emissions cuts. And just a note here, we've shared in the chat window the link to the report that Robert referenced earlier. It's definitely worth reading. Companies with net zero targets, and according to SBTi, I checked this morning, there are 1,594 companies with net zero targets, should do a number of things. Robert, as you outlined in the report together with Alexander from Klarna, estimate long-term CDR needs, set near-term budget targets, allocate funds, for example, through internal carbon pricing that some of the companies are already doing, contract diverse CDR methods, and also communicate that progress transparently. So do take a look at that report. Naseem, let's stay on this topic of corporate action. As you mentioned, FMC members come from hard-to-abate sectors. What specific barriers do these industries face in scaling up their CDR commitments, which you mentioned can be quite large? And how can they be addressed so we can see greater and also more immediate purchases?
Sure. Well, it's actually, as you mentioned, is a list of barriers. They're seeing for those that are already in the game somehow, it's easier maybe to step up because that know how or why it's already been resolved internally. So it's just a matter of sourcing reliable suppliers. But then across the different size companies, I would say those that are like waiting on the sideline, it's a mix of challenges. First, it's really high cost of technologies, especially when they compare to nature-based removals. The costs are considerably higher, and as it's been some sort of a slow progress, we haven't seen a huge reduction in prices. So that's probably one of the main barriers. And then there are others that are the other problems. For example, the public perception around CDR effectiveness, especially for hard-to-abate sector. Maybe for technological based CDR, it's less so a problem, but it's still it has to be addressed somehow before because there are buyers that are not really, even amongst our members, that are sort of are not very vocal about what they've done. So it takes a lot of risk in terms of investments, etc. But they don't want to share it very openly, publicly, because of this public perception. Then, of course, as was mentioned by Robert, in terms of the position that SBTi has had in dealing with CDR on certain regulatory environment, and that lack of mature standardization and MRVs. So these are sort of a soup of challenges that we've seen talking to different corporates, basically approaching CDR.
Thanks, Naseem. So those are, like, as you said, super challenges, but also the challenges that the sector is working on and actively working on. And Eva, I'd love to bring you into this conversation from the policy perspective. Any policy developments that can help mobilize hard-to-abate sector to invest in carbon removal at scale and urgently?
Well, I think the most important development to watch out for is the fact that governments have to start including durable CDR in their climate targets, in their indices. So once durable CDR is in that scope, then obviously all the policies that will be put in place, including carbon pricing policies like emission trading systems, those policies will be used to help scale up these removals as well. And we are at the point where we are kind of slowly getting and moving in that direction, but not there yet. Obviously, we have conversations, as Naseem mentioned, in the EU and in the UK about incorporating some types of removals in emission trading systems. I think in the EU, it's quite clear we're only talking about durable removals. And the question is, even within that group, which ones? The UK, I think, has a bit broader approach, and we'll need to see where they land, which will be interesting. And also, an important development a couple of weeks ago was that European Scientific Advisory Board on Climate Change published a very comprehensive report on CDR and making recommendations for the EU policymakers on what kind of policies to put in place for removals. And it went way beyond typical carbon pricing options. So there's going to be more tools out there that will help CDR to scale up. The question is, what is going to be the political appetite? You know, what to choose, what the policy mix is going to be looking like. But definitely very exciting space, because now it's getting real. It's getting beyond just discussion that we need it. It's about how we're making it happen in different jurisdictions.
Great, thanks, Evan. Thanks for also emphasizing, and something that also Nassim talked about is just this focus on optimism, but also the fact that the progress is happening. Tools are getting created and work is happening across the sector. I want to come back to supply, Nikki. So you talked about the financing side, but also one of the things that you focused on at XPRIZE carbon removal is innovation. You just last year you published Getting to Gigaton report, where you did really kind of insights, deep insight, got insights from 100 teams across 25 countries, but maybe just like grounding ourselves in 2025, looking into like for the rest of the year in 2026, what are some of the key innovation trends in CDR technologies are you seeing that are expected to drive scalability?
Mm-hmm. Yeah, we've been working with hundreds of suppliers over the last few years to really help advance their work. I think it's important to remind people that in the durable CDR space, a lot of the companies are really building their pilots and turning them on for the first time. 2024 was a huge year for most suppliers in this space to do the removal process for the first time. So they're under a lot of pressure, as we're hearing from all of the other comments around getting ready to meet the demand, but also convincing people to buy and, get all of the policy advocacy going in the background, as well as doing their own technology development and making sure that their solutions are as strong as they can be. And I think all of the suppliers are really focused on integrity and verification. And so they're all trying to advance their own internal MRV processes, as well as working with external third-party verifiers for the first time and getting all of that kind of ready to reach this maturing market. And, some of the trends that we're seeing, because everybody's trying to come down the cost curve as fast as they can, we're seeing, experimentation around modularity, bringing products to the forefront, trying to emphasize co-benefits, trying to work alongside existing industries, getting deeper partnerships with mining and desalination and other folks that can help them scale faster, because it is a race against time and price for many of them. So, what we're seeing on our side is experimentation on all of those fronts of trying to do that, while also working on their core technology performance. Every one of the suppliers that we visited, our 20 finalists, all in person this last year around the world in 11 countries to do the verification process for the prize. And everybody has deep R&D teams as well as deployment teams that are getting new projects stood up. Many of them have scaling models that require building multiple projects in different sites around the world. So you have to bring in, local teams and figure out how to work with communities effectively. And so there's a lot of moving parts that they're really trying to tackle on the ground to get everything to the level of sophistication that it needs to be to sell credits at the volumes we all know we need to get to reach any of our targets.
Thanks, Nikki. So innovation across the board, not just technologies, but also the enabling environment, the infrastructure that's needed to actually both do it efficiently at scale and also with integrity. I do want to actually come to the question about integrity from one of the participants. This question is about how to address corporate skepticism about investing in CDR credits, given their negative perception of traditional carbon offsets. I'd love to hear both from you, if you can just maybe talk a bit about how you even designed this XPRIZE carbon removal, and also Naseem from you too.
Yeah, when we designed this prize, it was back in 2018. There were very few methodologies out there, you know, to lean on. Even when we launched by 2021, it was still very new. We constructed a design of the rules in a way that looks at kind of three different things side by side. So we look at demonstrating the removal happening at kiloton scale, which is what everyone is doing at this moment in time. And then we look at cost projections up through megatons, so we can see how people are coming down the offtake agreements, which really, you know, will be the key metric here for many of them to be able to finance against. And then we look at what are the scaling pathways and limitations to get to gigaton. What are sustainability factors that we need to think about? What are community engagement issues that we need to think about when we reach, you know, these global limiters? And so the prize was constructed in a way to look at all different carbon removal pathways side by side under that metric. And since then, you know, we've seen methodologies come out going deep on every single sub pathway that exists. And so we're, you know, referencing all of those in the way that we look at things. But it is, at the end of the day, all about quality and integrity. We need to push the bar on that higher and higher every year. And we're seeing a lot of great progress just in, you know, the last 12 months around that. And in terms of the industry consolidating around best practices and higher standards. So that will be, you know, a key piece and a building block for all of these other efforts to kind of be able to reference. And hopefully we can continue to get more and more consensus there, because I think it only helps lift the whole space up the more agreement we have on what those standards should be. And so that can give signals and support that we want, you know, that's unified in the background to all of the governments that are looking to finalize all of their methodologies as well.
Thanks, Nikki. Maybe just to mention, Carbonfuture is also an MRE partner for the XPRIZE finalists for XPRIZE carbon removal, and that just demonstrates your commitment to really building with integrity from the ground up. Naseem, anything else to add on like how to really address the corporate skepticism with regards to integrity?
Sure, I think echoing what Nikki mentioned, it's like that the mature MRV that could really show the credibility and quality of the projects is definitely the case. I think in general, what really supports dealing with the skepticism is transparency, and like going for maximum transparency as possible in terms of the projects, the delivery of the projects, the quality, the prices, and essentially what is the decarbonization strategy of companies to exactly show and you know, like SBTi could support that, and showing that this is part of the portfolio of decarbonization. It is legitimate if it's under certain criteria, of course, and then it gives some sort of an cover for companies who want to take part. I mean, there are other important enablers in that front, similar to SBTi, the government's framework, like what European Commission is developing. So if there are like bases for what good practice or best practice looks like, and how to get there, then, you know, there will be less skepticism about how, you know, if that is really delivering, especially in showing that you're doing all that you can for reduction in hard to abate sectors, and then you're using CDR when it's you know, absolutely not possible through reduction levers.
Thanks, Naseem. There are a few questions that have come in related to VCM. So I'll ask Robert and also Eva to talk briefly about that. So maybe Eva, first to you. A couple of questions related to VCM and regulated market. How do projects within the VCM align themselves with the regulated market? What are the barriers, if any? Also, how feasible is it to integrate VCM with compliance markets like the EU ETS while maintaining strict environmental standards, and what mechanisms would be needed to ensure integrity?
Okay, shall I start? So in general, especially when we look at the VCM next to Article 6 markets, which we also consider compliance markets because countries are using these to achieve their climate targets, then we already see that Article 6 markets are making good use of the VCM infrastructure, because we see under 6.2, the bilateral deals between countries, they do use gold standard, they do use Vera. So there's definitely, it just doesn't make sense to start inventing a wheel while we already have a elaborated market that's developed, while we couldn't figure out or couldn't agree on these Article 6 markets under Paris Agreement. It took us, it took us almost a decade to get there. So obviously, meanwhile, VCM developed and is now much stronger, and the learnings from that could be used. And of course, the fact that there are both, I mean, there is potentially a competition in the future among competition for access to buyers, because you could either decide to sell your credits to a corporate buyer or to a government. So potentially it's then between the corporates and governments who actually has access to certain credits. And then there's the whole question around bringing VCM credits into emission trading systems. And we'll see, actually, you could say that the CRCF that is currently being developed, it's a framework for EU's voluntary market. Today, it is voluntary. Of course, we know that things might look different from 2031 onwards. So there, it's a bit more tricky. Like, would we still call it a voluntary market when we are at 2031 and those credits potentially could be playing a role in the EU ETS? I'm not sure. But what we can be sure about is, I think in the EU, for example, and this is where we have the largest emissions trading system, the consideration of what actually is allowed into this system is going to be very strict, because it has taken 2 decades to get this market properly functioning, and no one wants to risk. But of course, we see worldwide different governments taking different approaches. There are many tax schemes where VCM credits can be used. So there will continue to be opportunities there as well.
Great, thanks, Eva. You already answered these questions. So Robert, we're going to ask you another question on VCM. So somebody just wrote in a Q&A box, from a buyer's perspective, the VCM feels incredibly fragmented, even from an entry point perspective, marketplaces, traders, brokers, direct vendors, and even so more when it comes to insurance standards and so on. As the market evolves, do you see some level of consolidation and regulation to support buyers?
Yeah, and I agree. It is fragmented, and that's some of the signs that we're still in an early market. Eva mentioned the carbon removal certification framework, CRCF, in the EU, and that's something that could bring this kind of level of certainty that protocols and standards and suppliers that are certified under the CRCF could also sell to voluntary markets, even if it's not CRCF credits, but you have that kind of degree of certainty that an official entity have blessed this. So this can help bring some consolidation, I would say. But there will also be a bit of a Wild West in some regards. Like, we may see standards that have loose requirements on, let's say, enhanced rock weatherings, and others that have more strict and more scientifically based certain ones. And you might see competition where some buyers want to have the loose standard because the credits are cheaper there and so on, and no one is really going to tell them that this is wrong, aside from the conversation about the CRCF. So we may still have these kind of issues in the future, and we need voices to help guide buyers and then the ecosystem to point out which are the credible pathways, which are the credible standards that will, be viable in the future.
Great, thanks, Robert. And also for the buyers on the call, WEF FMC, led by Nassim, created a fantastic guide that we shared earlier in the chat. It's actually a guide that's based on the expertise and experiences from various WEF FMC members, other corporates. It's basically the how to navigate the market and what are the different pathways to purchase high integrity carbon removal. So do take a look at that. I want to come to this topic of CRCF, since you mentioned it, Robert, and Eva, ask you. There's a question on how will CRCF and Article 6 create incentives beyond trust in the market, for example, economic ones. What is your view, Eva, on the interaction of planned EU carbon removal certification with other removal standards?
So when we look at these two mechanisms, or Article 6 is rather two separate mechanisms, but in the case of Article 6, the economic reasoning for doing it is for governments to decarbonize and also focus on maybe more cost-efficient removals in their territory, and then use Article 6 for more expensive removals, right? To have another country financing this. So this is an obvious example where we are not just talking about the trust in the mechanism, but also something else that's an economic incentive that comes with it. Of course, within Article 6, though, we have 6.2 and the Paris Agreement credit mechanism, and the trust in these is, I would say, slightly different, because centralized mechanism is much more stricter in terms of what will be allowed there, but the bilateral trading between governments today is using whatever standards and methodologies that they choose to use. So there are some other question marks there that need to be ironed out. So there's that aspect. But the interaction of the CRCF with other removal standards, we will need to see how it works out in practice, because currently the work that is being done is really developing EU's own standards. It's obviously developed while being informed by other standards. I mean, that's how the methodologies that are currently drafted have been put together, basically using best practices that today exist on the voluntary carbon market. But the direction of travel is very clear, that the EU is developing its own methodologies. It doesn't take something that already exists and kind of just tick the box that, okay, this meets our standards or our criteria. It's really developing its own methodologies. So it's basically yet another standard, if you look at it this way. And the same goes for Article 6.4 as well. It is yet another standard. It can be informed by the best practices, and it itself will likely inform other standards. But we should not be naive and think that these in themselves will necessarily lead to that much harmonization. Like we should hopefully move away from fragmentation, but the challenge we're looking at is that by establishing new standards that should be, the one new standard, we just are establishing yet another standard.
Thanks, Eva. Also, a number of questions in the chat related to Article 6. We're not going to get to all of them. In fact, I'm just going to ask the question that was asked to all of the panelists, and then we'll move into the closing remarks just to get some of your key takeaways from this very broad discussion. So there was a question to the panel, so whoever wants to answer this. We continue to see the confusion between CCUS and CDR, which is problematic for scaling durable CDR pathways. How does this panel think we can spell out the differences beyond the echo chamber that already understands this? Any thoughts on this?
I just have a quick answer. We should just always be clear whether we talk about emission reductions or carbon removal, because I work extensively in both, in CCUS and CDR, and I'm just always very clear about whether I talk about emission reductions or CDR, and I think that has proven quite helpful.
We'll take
Yeah.
that as Naseem, anything?
Just echoing Eva, exactly. So whatever is in your basically scope, if that is a CCUS, whatever is beyond your value chain, sorry, I said the scope. So whatever is like in your value chain that is CCUS, outside of your value chain is CDR. But that's a challenge that I think we hope that there's a challenge of narrative in general around CDR. So it takes some collective effort to address.
Thanks, Evan and Naseem. So we've covered a lot of ground. We've talked about 2024, some of the key trends and insights. We've talked about 2025. We've looked at demand. We've looked at supply. We've talked about policy. It's a lot of ground. What I'd love to do in the next 5 minutes as we close out this webinar is just hear from each of you. What is the kind of one go-to key action for those who are participating in this webinar? Like if they were going to write an email right after this, what should they do? Like tomorrow, what should they go and tell their team? So suppliers, buyers, investors, policymakers, ecosystem members, what's your go-to for them? Let's start with Robert, then we'll go to Nikki, Naseem, and Eva.
Well, for buyers, I would say get started with an interim target. Like ideally estimate your long-term needs and then project from that. But just setting a monetary target, like we're going to spend X amount of dollars on CDR next year or by 2028 or something like that, and get started on buying is going to be tremendously helpful. So that's the top thing I'll say.
Great, interim targets. Nikki.
Yeah, definitely agree with that for buyers. For suppliers, I think, we need to keep our heads down and make sure that everything works as well as it can. I think showing real progress, real removals and deliveries are key in the next 2 years to continuing to grow the confidence. So don't underestimate the amount of focus that requires, even though I know you need to also be focusing on building the demand too. But that's where I would say focus right now too.
Great advice. Focus and execute. Naseem.
Well, I would say in this very uncertain, challenging time, now it's time for bold, decisive action. So let's forge stronger public-private partnership and accelerate corporate commitments. So for corporate buyers, especially in hard-to-abate sector, start small, but start today.
Love it. Start now. And then Eva, final word to you.
So I have a call to action for policymakers. If not yet, it is time to bring durable CDR into the NDCs, so the climate targets, because this brings it to the scope of compliance markets, among other things that can really help to scale up CDR to where we need to have it.
Fantastic. Thank you very much. So we have specific calls to action for buyers, suppliers, policymakers, and hopefully investors are listening too. And thanks to the panel. Thank you very much, Robert, Nikki, Naseem, and Eva for sharing your expertise and insights. Thank you to those of you who pre-submitted the questions and also shared questions live. Clearly, we could spend half day discussing this topic. And we'll use some of the questions that you shared to shape future webinars. With that, thanks very much on behalf of Carbonfuture, and do take a look at all the reports and information that we shared in the chat window. Bye, take care.
Thank you.
Thank you. See you.